Good morning, everyone. If you're just joining us now, I'm Valerie Plumpus, Equality California's National Policy Director. This is our second webinar on the impact of COVID on our lives. You'll probably see on your screen there's a question. We've got a number of polling questions we'll be asking throughout the session today. So if you can fill it out, then we'll be responding back with everyone's responses to these questions. So you can just fill them out. As always, as questions come up, you can put them into the Q&A box at the bottom, and we'll be posing them to our guest speaker. We'll be starting in a few minutes. Okay, maybe we should get started. Well, thank you so much for joining us today. My name is Valerie Plumpus. I'm the National Policy Director for Equality California. I'd like to welcome you to today's webinar. This is the second one in our series. Thanks to the generous support of AT&T Foundation and Sempra Energy, Equality California is able to help the LGBTQ+ community respond to the COVID-19 crisis. If you haven't already done so, I would suggest you look at Equality California's new website. The address is covid19@eqca.org. And there you'll find a number of links to a wide range of services that are provided at the federal level, the state level, and the county level. We've also established a telephone helpline. You can call and you can leave your questions about your personal circumstances, and you'll get a call back from someone who's on staff to answer your specific question. So if you don't find what you need, please let us know, and we would love to connect you with resources and to help you. As I said, we're also doing a number of webinars. We're going to be doing 10 between June and the end of November to help LGBTQ people navigate these seriously challenging times. Today's webinar topic is protecting your finances during the coronavirus. This is obviously a critical area of discussion given that somewhere between 30 and 40 million people have recently lost their jobs. They've been furloughed, they've lost income from side gigs and any other income generating opportunities. And to join us today, we've got Kim Palmer. She's amazing. She is a personal finance expert, a credit card expert. She works at NerdWallet. She's written 3 books about personal finance. She was at US News and World Report, where she was the moneyed editor, and she was also at AARP. And for those of you who are part of our first webinar series, you'll recall that we had someone from AARP speaking about how to retool your resume. So as always, AARP has been super helpful with regard to helping people navigate challenging times. As always, our webinars are going to be recorded. They're going to remain accessible. I'll be putting links to resources in our Q&A box. It's at the bottom of your screen if you see it. If you have questions, please put them there in the Q&A box. They won't be visible to the other people who are on the who are participating in the panel, but the panelists will be able to see it. And that's where you should post all your questions for our guest speaker. As always, after today's webinar, Equality California will be sending out the links. Kim has provided a number of slides for us. She's going to be sharing her screen, so you can ask questions during the presentation, as I said, in the Q&A box. And then afterwards, we're going to be sending copies of the presentation to everyone who's RSVP'd and further resources. So Kim, I'd like to welcome you, to thank you so much for joining us today. We're thrilled to have you. Welcome. Maybe you could tell us a little bit about what NerdWallet does and a little bit about your background.
Of course. Thank you so much for having me. I love talking about these topics, so I'm so happy to be here. And I look forward to hearing questions that people have too. At NerdWallet, our goal, our mission is to basically help people make better financial decisions. So helping provide clarity around different choices. We help people do everything from make a budget to pay off debt, to choose the right credit card or mortgage for them. We are a website, nerdwallet.com, and then we are also an app.
Perfect, thank you. So I understand that you've got some slides for us and you'll be doing a presentation. Maybe you want to share your screen and we can sort of follow along with your presentation.
That sounds great. I will do that
Thank
now.
you. I'll put myself on mute.
All right, can you see my slides okay?
Yes, we can see them perfectly. Thank you.
Great. So I just gave you the background on NerdWallet. I like to start when we talk about these topics with the big picture. So I'll start by talking about some of the general personal finance things that we can do to protect ourselves in this crisis and all that we might face. So a lot of these basics that we can do to protect ourselves, they're of course most helpful if we start them before the crisis happens. By doing things like having an emergency, which basically means having 3 to 6 months of expenses ideally stored away. So then if you do suddenly lose your job, you're able to still pay your bills, pay the essentials while looking for a new job. Of course, for a lot of people, 6 months is huge and massive and overwhelming to even think about. So if that's what it feels like, it's it's another option just to shoot for something like $500, putting $500 away in the bank so you know it's there for you during a crisis. We do have calculators. There's lots of calculators online to help you figure out exactly how much you would want in your own emergency fund. And it does often feel overwhelming. So we really encourage people to start small. Even just putting away a small amount each week from your budget can be helpful. Speaking of budgets, that's the other big category that can be helpful just to get a hold of a sense of control during a crisis like this. So we really love the 50-30-20 budget, which basically means that you're putting 50% of your take-home pay towards needs. Needs are things like your housing, your food, 30% towards wants, and that's of course things like travel and then it goes towards any debt payments you have and savings. One thing we've heard over and over again from people during this time is that, of course, all of our budgets have been hugely impacted by the coronavirus. And so that 30% category where we usually spend things on entertainment, going to the movies, that kind of thing, has been drastically cut back. And so if it's possible, if you're in the position where you do still have income, you can think about what changes do you make permanent from how coronavirus has impacted your spending. I mean, if you look at data that credit card companies provide of how spending has changed, and you can really see it's just, dropped off 40% across the board, and then in some categories even more so. And so what's interesting is some people are saying, oh, maybe instead of going back to that previous level of spending, once things start to open up, maybe I can shift some of that into savings instead. And that can just provide a little bit more stability when a crisis like this hits. So for a lot of people, our question is, how do we prioritize expenses right now when we're in the middle of the crisis? It's too late to prepare for it. We're already in the middle of it. So it's overwhelming and there are no easy answers, but there are things we can do to take back a little bit more control and to make sure we have those essentials taken care of. So to prioritize, we always encourage people to focus on what you really, really need: food, housing. Next up, this might be something like utilities. Okay, so I had just finished basically saying the 3 big things you want to do to prepare for a crisis. So you want to have an emergency fund. You want to make sure which typically we say 3 to 6 months worth of expenses, but that's not realistic for everybody. So just aim for $500. And then you want to make sure you are thinking about your budget. And I have a link here to our 50-30-20 budget, which I think is a really useful way of thinking about how you're spending money. So let me go to my next slide, which is I think this is right about where we got cut off before. So how do we prioritize expenses in an emergency once we're already in it? Because for a lot of people, it's just not possible to pay every single bill right now. We encourage people to really triage by focusing on the essentials. So you want to think about making sure you have money for food, for housing. Next on that list might be things like utilities. If there's any expenses you have that you need to do your job, and maintaining your environment is of course so essential right now, if it's possible, you want to prioritize that too. And then a lot of companies right now actually offering hardship programs. And so they are offering to waive late payments, to waive interest in some cases. So if you know you can't pay, you don't just want to not pay and let it just ignore the bill. You want to call and ask them if they have a hardship program that you can opt into. And in a lot of cases, customer service reps, they are looking for you to say something like, coronavirus has directly impacted me. It has impacted me either financially or health-wise. And as long as you say that, then you might be eligible to opt into that hardship program. The details do vary a lot, so you want to make sure you understand, is interest still accruing, or is it truly waiving those payments? And of course, ultimately, you will have to still make those payments, but having that extra month or two could be really key to helping you get through this crisis. Credit card companies in particular have offered a lot of hardship programs. Almost every major issuer has something in place, so it's definitely worth looking into. So in terms of just withstanding this financial shock and getting this crisis, a lot of this, again, they are steps that are most useful to do before the crisis hits. So if we can do this going forward, it helps us be prepared for the next crisis. Number one, paying off high interest rate debt, because when we are carrying things like credit card debt, which typically comes at 17 or 18% interest, it's just a huge drag on our finances, hundreds or even thousands of dollars a year in interest alone. So getting rid of that by paying it off slowly, slow and steady progress by paying more than the minimum payment can be really helpful and just helps you get in a more stable position for the next time it's difficult or next time there's a crisis. Again, those emergency savings are so key. And where you want to put those emergency savings is somewhere where they're working for you, where they're growing over time. So in general, online banks have the highest yields in terms of where you're putting your savings. Of course, right now we're in such a low interest rate environment, so it's really hard. I mean, if you look at the traditional banks, it's hard to get above, 0.1%. I think I helped my daughter take out a savings account. She put in, I think, 300, gained like 2 cents in 6 months. So it's very discouraging to be in such a low interest rate environment. But there are other options. So just knowing that you can compare rates and look at online banks as well. Sometimes people don't think of that, but the online, the highest yields. So that's definitely something to consider. And then thinking about what consumer protections exist. There are safeguards you can have in place for emergencies. So making sure you have things like health insurance, disability insurance, life insurance, even homeowners and renters insurance. A lot of people overlook things like renters insurance, but it is actually very affordable to have in place. It's typically $100, $200 a year. And then, if there is, a burglary or a fire or something like that, you won't be out all that money of replacing it. So just having a review of what you have in place for yourself, I think can be really helpful. So we have some extra resources. If you want to do a deeper dive into any of these topics, you can read our articles on the subject. We have a guide to coronavirus on our main nerdwallet.com page if you want to look further into any of that. So now I want to just do a deeper dive into credit cards and credit issues, because I know it's something that's of such concern to so many people. And it's something we specialize in too. So I think it's worth talking about. So many companies right now, as I mentioned, they are offering programs that people can opt into. One thing we've found is that when you call, if you call your credit card company and what's your hardship program, what's available, can you help me out? I really can't pay my bill this month. We have found that in a lot of cases, we just did a survey on this, in a lot of cases, the same people who are calling to ask about that, they also find their credit limits going down. So the card issuers are slashing credit limits, which means you don't have as much, you can't spend as much on your card. So it is something to consider before you do call and opt into a hardship program. There can be a downside in that you can face lower credit limits. And then of course it can be harder to put those essentials on your bill, on your credit card. But it's something to consider if you just know you can't pay. So if you do have credit card debt, one thing to consider too, and this again, it's for a situation where you still have income coming in. So if you still have income now, or when you get back to that situation, because if you have been using a credit card to pay for these essentials in the meantime and you've been accruing debt, it can be really useful to look at a balance transfer credit card. Balance transfer credit cards basically let you, for a period of time, usually 12 to 15 months, have 0% interest on your credit card debt. So it means for that period, you're not accruing additional interest. And that's so useful to people as they're really, trying to make headway and pay off that debt. So it's definitely something to consider. The caveat is that you do generally need to have good credit to qualify for those cards. But if you do, it's a useful tool. Another option to consider when you're really struggling with managing debt is to consolidate it into a personal loan, so a different kind of debt. The interest rates are usually lower, and then instead of having 5 or however many payments each month, you have one payment, and it can be a little bit easier to think through and organize, and you're not going to miss a payment. In general, the interest rates are lower than on a credit card. So that can be something to consider too if you're just really struggling with paying off debt right now. So one thing we talk about a lot when people ask us, how do I pay off all this credit card debt, is to think about the different methods that you want to use. There's 2 main ways to think about paying off credit card debt. You're either going to pay off your smallest debts first, and then you feel a sense of satisfaction. It can help you keep going. Or you focus on the highest interest rate debt first, known as the debt avalanche method. And in general, mathematically, that makes more sense because you're paying less interest overall to focus on that highest interest debt. But some people say it can be harder to stay motivated because you don't have that sense of satisfaction from paying it off or paying off the smaller ones that you owe. So that I'll stop sharing my slides. And of course, happy to take any and all questions.
That's great. Thank you so much, Kim. So if you're just joining us today, I'd like to welcome you. This is our second webinar in our series. The topic today is protecting your finances during coronavirus. We've been joined today by Kim Palmer, who is a credit card and personal finance expert at NerdWallet. So she's written 3 books about personal finance. She was the money editor at U.S. News and World Report and also at AARP. So as Kim mentioned, we have a Q&A box at the bottom of the screen. If you ask any questions, they won't be visible to the other guests who are on this platform, but definitely our expert speaker can see them, and I can ask them to our speaker. So Kim, you did a great presentation. We really appreciate it. And I just want to ask you a couple of questions as we're waiting for some of the questions to come in. So for the people who are overwhelmed with debt, completely overwhelmed, they really find it impossible to pay their bills, do you think that they should consider filing for personal bankruptcy? And what would that do to their credit? And what are the impacts of that?
Well, it's such a good question because we actually think in a lot of cases, people do not opt for personal bankruptcy because of the stigma around it. People feel like it's, a sense of personal failure. They feel guilty. They feel like they should pay their bills off, but sometimes it's just not possible. And so in a lot of cases, for people who are just really struggling and it's not possible to make that headway, we, as a rule of thumb, if you feel that you won't be able to pay your debt off in the next 5 years, given your income, then it's worth considering. To file for personal bankruptcy, you do have to pass what's called a means test, which basically just means that considering your income, your household size, a few other factors, there's a calculation that determines if your income is low enough to qualify. And if you do qualify, it can be a useful option. A lot of people think their credit will just be permanently ruined, but the fact is it stays on your credit report for 7 to 10 years. And a survey or a study by Equifax actually found that people's credit scores actually start to immediately after filing for personal bankruptcy. And that's because for so long, people have often just not been paying bills. They're so overwhelmed. And then once you get control of things, get organized, a handle on things, you have a plan in place, it's easier to make progress, to start paying off what you can, and to have your credit score go up. So I think it can be a useful tool, and it's probably an underutilized one.
So good to know. So let me ask you another question. So under the CARES Act, which is obviously the big bill that Congress passed several months ago in order to help people navigate the COVID crisis, state unemployment benefits were substantially increased with a federal supplement. It's another $600 a week, and that period of time is going to go with, they extend through the end of July. But unless Congress extends those supplemental benefits, the unemployment checks will snap back to the much lower levels come August. Obviously, millions of people, as we discussed earlier, have lost their jobs and being furloughed. Do you think it's better for them to start applying for jobs, or do you think that they should stay with getting their lower unemployment checks and just hope that Congress takes action?
I think it's so difficult because there's so much anxiety with this coming end of the additional benefits. And it's really, it's really only a few weeks. Oh, I mean, it's coming up very quickly. And so in general, looking for a new job, replacing your income, even if it's not the same kind of job or it's lower income than before, is a more stable financial route to have that will last past August, past July. And so looking for a job, I mean, it can take weeks, it can take months. So that's always something to prioritize after filing for unemployment and collecting those benefits. I think it's always hard to know and to depend on what Congress could possibly do. And so it's just not possible to assume that that will definitely be replaced or definitely happen. And so looking for a new job, even outside of, what you previously did, it is the case that even though a lot of industries, of course, have been so hard hit, other industries are hiring more remote jobs, customer service. There's all kinds of opportunities that, ironically, the coronavirus epidemic has also created. And so by shifting and focusing on those areas of growth, it can be easier to find a new job.
Mm-hmm, mm-hmm. And I'd like to remind our guest today that our previous speaker, the last time we had our webinar, was on retooling your resume. There are a number of resources that are available on our website. So if you're interested in that or you'd like to follow up, please let us know. But there are a number of resources already on the Equality California COVID website with regard to resume retooling and maybe on LinkedIn and some of the other resources. So if I could ask you another question, you referred to a little bit, but maybe that was before the technological glitch when we went down. So I just wanted to ask you another question that's related to what you had said. So if people have some ability to pay some bills, or maybe they just received, their tax refund bill, do you think it'd be better for them to make a big dent in say, their credit card bill that might have, a higher interest rate due? Or do you think it's better for them to make a bunch of minimum payments? And if they make a bunch of minimum payments, is that better for their long-term credit? Or does that really not make much of a difference?
So in normal times, non-coronavirus times, we would always encourage someone, if you have extra money, like a tax refund or a stimulus check, you would want to put it towards paying off that high interest debt, especially if you already have even a small emergency fund in place. But we are just not in normal times right now. And so a lot of the traditional personal finance rules are just out the window. And I would absolutely encourage someone getting that stimulus check to put it towards the essentials, to food, even not if you're okay this week, save it for food for the next month, because that is something that is essential and impossible to replace. So with a credit card bill, if you let your credit card debt, go up a little bit more than you are used to or comfortable with, that might be what it takes to get through this crisis. And it's not something to worry too much about, because once you do replace your income again, you can work on paying it off and getting it back under where you're comfortable. And so in this time, the rules have just changed, and we really encourage people to focus on those essentials like food and housing, and to not worry so much about those other things that we usually talk about.
Mm-hmm. Mm-hmm. So some of the things that you mentioned, that there are some companies that are basically said that, if their customers can't afford to pay their bills, to contact them for forbearance or, for assistance in paying their bills. Do you think it's a good idea for people to say contact their landlord or other, I don't know, if they have a bank loan that they haven't been able to pay on, or maybe student loans? What is your recommendation on reaching out to creditors who are in a position of maybe helping, but maybe not?
I would definitely encourage people to make that phone call, especially if it's like a landlord, for example, if it's part of a larger company where there might be some kind of programs in place to be helpful to renters. And in the case of other bills that are coming due, it's always a good idea to call and ask, because there really isn't much of a downside, with the caveat that in some cases we are seeing credit card issuers do things like slash credit limits. But in general, getting into those programs and getting that help can be so useful. We've actually seen, even with cell phone companies, utilities companies, taking proactive steps to help their customers. Auto insurance companies actually have also been offering refunds in some cases because people are just driving less. And so if you haven't received that kind of help yet, if you haven't heard from the companies that you owe money to each month, definitely make that phone call, because companies are actually taking a lot of steps right now because they know, I mean, this is just a crisis period, and they don't want to lose you as a customer either once we get through this.
That's great. So we have a question from Wade that's in our Q&A box, and it has to do with small businesses. And Wade's question is, are there resources you know of that can help with the Small Business Administration's PPP, which is the Paycheck Protection Program, and EIDL loans? The SBA, which is the Small Business Administration, and everyone else I've reached out to can't answer how I should spend those funds if I'm a 1099. So a 1099 is obviously a self-employed person who is not filing under a W-2. Does that money count as payroll? I'm terrified to take on an EIDL loan that I qualify for because the language is so unclear about how I'm allowed to use those funds.
So this is not something that I write about specifically, so I wouldn't want to answer those specific questions, but we have gotten questions about small business loans, and what we found is that usually you want to contact the Small Business Administration, but the lines and the ability to reach them has been so hard, so challenging. People are just waiting for so long. But in general, that going to that source, the source is the best way to get answers. But having said that, I know it's not as easy as it sounds. Right
no,
now.
I know that from other people. I mean, they call the SBA, and it just rings and rings and rings. They're never able to get in. And I guess Wade's question had to do with, as a 1099, obviously not someone who's self-employed, basically, are they eligible for these benefits under the Small Business Administration? Do you know that, or would you prefer to sort of deflect that and have?
Yeah, I don't think I could answer that, his question. I think that, I'm not the person to answer that one.
Yeah. My understanding, Wade, is that under the CARES Act that people are covered as 1099s, people who are self-employed, maybe if they have part of the gig economy, Lyft drivers or Uber drivers or doing food delivery and this kind of thing, that they are eligible. But it really depends on a state-by-state basis. And so, we're not really in a position to offer specific advice. And I know that it's difficult getting through to officials. There are a number of resources on the Equality California COVID website. And if you want to ask a specific question, we'll be happy to respond to it. Our staff can do research and get back to you on your personal circumstance. But it's a great question. And I know there are a lot of people who are in the 1099 bracket who have not really gotten a lot of assistance because state and local officials don't really know how to answer. So if I could ask you another question, Kim. So unlike every other country in the world, huge medical deaths have been one of the reasons why Americans have had to file for bankruptcy. What would you tell people who need medical treatment? Obviously, we're not talking about, acute care like COVID, or if they've, fallen off something and broken their arm, but have, medical conditions that need treatment, but they don't have health insurance, or maybe they're uninsured, or maybe they were employed before the COVID crisis and they've lost their job and therefore they've lost their employer provided insurance. What would you tell people with those sorts of needs?
Well, I mean, calling actually providers and asking in advance of if it's a planned procedure. In some cases, providers have programs in place to offer financial assistance, or at least the payment program, and also negotiating bills either before or after the fact. So calling the hospital that you owe money to, and especially if you have been affected by coronavirus financially, explaining that situation. Just like some of the bigger companies, hospitals are also offering those kinds of hardship programs right now. And so it's definitely worth calling and asking to see what's available. Under personal bankruptcy, like we talked about before, medical debt is included under that as well. And also I wanted to mention, because you did, I think earlier, ask about the student loans as well with the private lenders. It's also worth calling them, because even though under the CARES Act that affected federal student loans, now we've actually heard from a lot of private student loan lenders that they are offering similar hardship programs. And so in that case, you actually are usually not getting the interest waived, so the interest is still accruing. But at the same time, it can still be very helpful just to get through this crisis, to be able to delay those payments.
That's great. So I understand that we're going to be putting up some of the responses to the polls that the poll questions that have been posted. So some of these questions have to do with whether COVID has affected you personally and how so. Here we go. So maybe I'll just read them for people maybe who can't really see the screen so well. So the first question was, has COVID-19 directly impacted your finance? And then there's a number of questions. So number one, been laid off or furloughed? 33% of people have experienced this personally. Debt's gone up, again, 33%. Had trouble paying my bills, the same number of people. Not yet, but I'm worried about the future, and other. So obviously it's something very worrisome. A third of the people who are participating in our webinar today have been personally affected, and presumably their families. I understand that also, maybe anecdotally, that a number of kids have gone back to their family homes, or parents have brought their children back in. Families are doubling up. Do you have any thoughts about some of the resources that those families might be turning to, Kim?
Yeah, we've seen that a lot. And actually, it can be really helpful financially in terms of reducing at least your big housing payment to combine households and combine generations, but it also causes a lot of stress. So that's less about the financial aspect, but we do hear too that once people make that choice for financial reasons, it generates a whole nother level of stress. You have to relearn how to live together. And in some cases figure out how to share the ongoing expenses, like, who's buying the food, who's buying utilities. You have to think through all of those financial issues all over again when maybe you haven't lived together in years.
Mm-hmm.
But at the same time, I mean, we've heard that it can be, extremely helpful financially to combine households like that, even in non-coronavirus times.
Yeah, I think that's right. Okay, so here's the second poll question. So we've asked, in light of the COVID-19, have you reached out to any emergency or community resources such as food bank or utility assistance? And 25% of the people who have responded said yes, they have reached out to local assistance. Also very sobering. Here's a third question. It has to do with health insurance, just the issue that you were talking about. Thank goodness so far no one has lost their health insurance due to COVID. On the other hand, we saw that the federal government is going to be furloughing millions of people in the next month or so, and possibly these numbers will go up. And this is obviously also something that's state by state based. In California, there's Covered California, so there's a number of resources that people can reach to with regard to health insurance, and it's a comprehensive policy. But I know there are other states that have less robust protections and very short periods of time where people can re-enroll. So I don't know if we have any other questions that are
We have one more question. I see it in the Q&A box. What do you think the credit financial landscape will look like as we begin to open back up? I think it's so interesting because right now we're seeing with credit issuers really cutting down on the available credit to people. And that's because they're worried about the state of the economy and they don't want to be vulnerable as if people default, as people are doing. People aren't able to pay their bills. It makes them more vulnerable. So to compensate for that, they are cutting back the amount of available credit. And that tool I mentioned earlier, a balance transfer credit card, where you have that 0% interest rate for a period of time, we're also seeing it much harder to qualify for those cards. And so whereas previously, if you had good but not excellent credit, you might have been able to qualify. Now they really want customers with only excellent credit because they don't want to have that risk on their own books. And so I think we'll continue to see that tightening up of the credit markets even as we begin to open back up. So for consumers, it's good to know just that it might be a little harder to qualify for credit cards.
Mm-hmm. If I could ask you sort of a related question, with regard to the COVID job market, obviously it's going to be in pretty poor shape for the next, for the foreseeable future, and millions of people will be looking for scarce jobs. Do you have any recommendations of what people should do to begin to look for jobs, especially if the field they were in before no longer exists, or they need to pivot something that they may not have worked in before?
Well, I think one exciting aspect of the job market right now is just incredible growth of remote work. And so using websites that focus on remote only jobs, I think just it can make you feel a little bit more optimistic about the options right now, because unlike other industries, which of course have just almost completely shut down for months, remote work in a lot of cases has been booming. And there are a lot of remote only job sites out there that can just help give you a little bit of hope and direction about the options and what's growing.
That's great. We have another question that's come in on our Q&A line, and again, it's at the bottom of the screen. You can see it to the right. Are there any books or other resources you recommend to learn more about how to manage our finances, investing, and our increasing our savings? I know you've written a
Definitely.
number of books, haven't you?
Yeah.
But not
Yes,
just you.
of course. And also I really like podcasts. I know they didn't ask specifically about podcasts, but I think that podcasts are a growing way to learn about finances too. There's some really good ones out there. There's one fun one called Bad with Money. There's one, what else? Farnoosh Torabi has a great one I really like too, called You're So Money. So I think that can be a fun way just to, constantly be learning about finances. And then there's so much online. I mean, of course, NerdWallet, and then there's so many personal finance resources online. So that can be a great option too.
So with regard to NerdWallet, I know that there are a number of resources you have there. Can you tell us about some of the resources that you've got on your website that people can use to help prepare themselves?
Yeah, we're all about content articles to help people walk through this, and then tools. So things like online calculators to help you make a budget or to pay off debt. You can type in your own numbers and see what mortgage you would qualify for or what credit card is best for you. So we really like crunching those numbers and having calculators that just make it really easy to figure it all out. If you go to the main site, nerdwallet.com, you can see all of our coronavirus resources. And then from there, you can find what you want.
Oh, that's fantastic. That's really very helpful, Kim. And also, for those of you who are joining us now, we're going to be sending out, as I said, Kim's slide presentation. We'll have a number of other resources, so you'll have an opportunity to pursue further. So we could ask you to fill out this last survey. We'd love to know what you thought about the survey and helping you navigate the crisis that's at hand. If you have any other ideas for future webinars, we'd always be, thrilled to hear them. We really want to be responsive and receptive to our community. So the question here is, how helpful was the webinar in helping you learn how to take care of your finances and your credit? So if you could fill that out, it would be super helpful to us. We would love to know how is this that we can better support our community. So Kim, I think we're sort of at the end of the question. No, there are a couple more questions in the Q&A box. Let me ask you. So Vanessa has said, I haven't checked my credit card score for years because of bad credit. What is the best way to challenge questions with old bills? Now that's such an excellent question.
Yeah, so I want to make sure I understand it properly. So meaning that you want to challenge errors that are on your credit report. Do you think that's
I assume that's what it is. I think that probably, so maybe you can discuss a little bit about how the credit card company, how credit is scored. I know there are 3 companies, you can run through that. And that, you can get your once a year, you can get your credit score, and then there are opportunities to challenge. So that's an excellent question.
Okay, that's such a good,
everybody.
Because a lot of us do have errors, old things on there that shouldn't be. As Valerie mentioned, once a year, you can get your full credit report. And that actually is generated by all 3 major credit bureaus. You just go to creditreport.com and you enter your information, and then you can see what information they have about you, which sometimes is incorrect, sometimes is surprising. They have your, every address you've lived at and all kinds of information. So you can pull that and then see what is not what is incorrect. And they're required by law to that you challenge. And so there's a process for that. In general, it has to be in writing. You explain the problem, the error, and what's wrong, and then they have to respond to you and fix it if it's actually the case that it's incorrect. And so just going through that written process. So I would start with annualcreditreport.com just to get your credit report. And then you can decide what you want to challenge. And depending on which credit bureau it's coming from, there might be a slightly different process at each one. So you want to go to each individual credit bureau and follow their written process. And email In some cases, it might be even snail mail. So you just want to follow those steps.
So if you saw if you get your credit report and you see that I don't know, there was an old medical bill that you had resolved and it was off, you thought you'd been done with it like 2 or 3 years before. Is it too late to sort of challenge these things? I assume the answer is not, and it's important to do so. But then would you have to then check with all the other credit card rating companies and to make sure that the same error was fixed, or do they coordinate? Like, how does that work?
Yeah. So in general, when you get that annual credit report, that full report once a year, it should pull from all 3 credit bureaus. As long as you do it once a year and you continually monitor what's on there, eventually you'll cover all your bases at all 3 credit bureaus, and then you'll actually see where the information comes from. So say you see that incorrect medical bill that comes from one credit bureau, say, just to give an example, say it's TransUnion. You would go to TransUnion and you would explain, follow their process, get the error fixed. And then if you see next time you pull your credit report, it comes up, Equifax is reporting the same error, we would have to repeat that process. However, there is supposed to be some coordination, so you might not have to do that, but you just want to double check to make sure.
Okay, that's great. So we have another question in the Q&A box, and it says, I've been saving for a down payment for a house for a while, but I'm feeling hesitant to invest that money because of the uncertain times. I've heard different opinions about home buying during these times. What do you think?
So predicting the future is always a little scary. I don't want to do it, but I think that a lot of people are just, frozen in place right now. They're not making those big life changes or choices that they would have pre-coronavirus. And as a result of that, in some markets, the real estate market has certainly slowed down, but that's not the case in all markets. So it really depends so much on where you live and where you're looking for a home, and how that area has been affected, not just by coronavirus, but by the larger economy and what's going on. And so I think it really depends on where you live and how the market is, and what the future of jobs looks like where you're looking.
Mm-hmm, mm-hmm. I don't see any new questions in the Q&A box. Is there anything that you'd like to finish up with, Kim? Some other ideas or words of wisdom or suggestions that would be helpful to our speaker?
Yeah. Well, first I'll just say thank you so much for having me. It's been so great to talk through all this. I think right now a lot of us just feel like it's a very out of control, stressful, anxiety-provoking time. And I think that taking steps to get control of your money by doing something like making a budget for the first time or starting that emergency fund, I think it can help us, bring back some sense of control, some sense of normalcy to this unsettling period. So I hope this was helpful, and thank you again.
Thank you so much, Kimberly. We've got another question, or not a question, but something nice in the Q&A box. It says, thank you so much, Kimberly. Wish we could have all learned this in grade school. Better late than never. And I think that's exactly right. It's, these personal finances are something that's uncomfortable and kind of scary for a lot of us to think about. We get overwhelmed. And even at this time of, like super uncertainty, I mean, like bills come in, you're kind of afraid to open them up. You're not going to pay them. They start backing up, by the side of the, on the kitchen counter. And then, we sort of face, a crisis all at one time. And I know that a lot of people are suffering in this country. And we have, a lot of anxiety and uncertainty, as you mentioned. And really, we thank you so much for helping us with the tools to navigate this. So thank you so much again to you, Kim. You've been an amazing speaker today. Very grateful to you for your expertise.
Thank you so much.
Thank you. Bye, everybody. Please join us for our next webinar. We'll be sending out an email, as I said, with all of Kim's information. We've got further documents coming up, and I think we'll have another webinar next week or the week after. Thank you again for joining us today. Bye, everyone.